Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday and this is the daily report for gold and silver. Following the release of minutes from the most recent FOMC meeting last week, we have moderately to strongly lower precious metals prices across the board. Our stop was hit on our gold trade. We'll go into that in a second. First, the price changes, 1203.04. That's our current print on gold. Puts it off roughly $6 on the day. The low, 1197.60. The high, 1211.40. Silver also trading under pressure, actually off a little bit over 2%, so it has the greatest decline, percentage basis decline, I should say, on the precious metals today. Currently trading 1651, the low 1638, the high 1691. More on silver in a little bit. Interesting scenario on the charts. We're looking at a weekly chart. This, of course, is cash gold here. And there's no doubt we have seen some real rallies off of this low at about 1141, 1, 2. We had 3 positive weeks in a row. When I say positive, I'm talking about the close being higher than the open. In the case of last week, you didn't get a higher high, nor did you get a higher low, but you did get a higher close compared to the open. On this week's candle, you can see we came up, we identified a resistance area that I thought we should have no trouble getting through, and that was 1221 to 1224. When we look at our candle now, and we can see that it has touched that high, this being Wednesday, we're almost back at unchanged on the week. It's green, but green by, maybe a tick or 2 ticks here. So you're in essence unchanged. We could in fact go negative on the week or go back red. There's no doubt this was resistance that we couldn't overcome. And it reminds me of a story, and I know I've told the story on many, many occasions, but it was a story that was relayed to me by Larry Williams trying to explain the real dilemma that market technicians, I would imagine all analysts have to go through, but specifically market technicians, because we're looking at a math-based filter that shows us where the market has been. And his analogy was that we are simply individuals on the back of the boat, and we're looking at the wake on the back of the boat, and we're trying to ascertain the current direction, where the boat's going, by looking at where it's been. And the truth of the matter is, only the captain knows when he's going to turn the ship. And so I bring that up because it's this release of minutes today, now that there seems to be a little bit more hawkish attitude in the Fed, that the rates might go in as early as June rather than September, as was anticipated when the meeting concluded and there was a short question and answer period. Now that seems to have kind of shifted. And when that shifted, of course, we had tremendous volatility within the equities markets. The dollar, which had been dramatically down overseas, really popped back up. We'll look at a dollar chart in a little bit. Of course, precious metals under pressure, and oil back lower today, down near $50 a barrel. Our stop was hit. We need to look at that, though, on a daily chart. And we're doing just that. This, of course, is a simple daily chart. And then if we go to our lows, we see that the lows, roughly 1196.66. So no doubt 1199. Stop was hit. In at 15, out at 99, a $16 loss on the market. So traders, we did talk about the dollar at the beginning of the program. And as we have talked about on many occasions, that a lot of what we see in terms of the moves that we see in gold lately, because of the activity in the dollar, have really been precipitated by the dollar. That is not the case today. Today's moderate lower trading, the $5, $6 that we're seeing, is not due to the dollar, because when the dollar itself began to get a little bit stronger, that's only giving up maybe $1, $1.50 on the day. The rest of that is selling in the market. So you have some genuine selling in the market, a little bit of dollar strength adding to it, but it's certainly not the big picture. The big picture, of course, was the way analysts are interpreting the minutes as they were released by the Federal Reserve from the last meeting. Oil also trading about $3 a barrel lower. This is a monthly chart, And the reason I'm starting with the monthly, we'll convert it in a second, but we've got this real benchmark, I should say, right at around 48. You can see these are some extreme lows, but I'm really looking at where the market opened and closed during the month itself. Now, when we convert this, you're not going to really see anything when we convert it to a weekly as much, because on the week, you can see these last couple of weeks have been almost pure dojis, but you'll really see it on the daily chart, because the daily chart is where we're going to really see this sell-off. That's right in here. So we do have oil lower today, moving back towards that $50 per barrel. So traders, the big question is obviously, where do we think gold is going from here? And typically, if I'm stomped out on a trade, I'm going to let the dust settle first before I really come up with my concrete conclusions, but I am forming my opinion at this point, and this is what I'm seeing on a cursory level. The market comes down, obviously. We've got this substantial move to the downside. Now, when we look at this in hindsight, and when I say hindsight, it's because the market has hit this resistance area, but pretty much popped off it. There is a real possibility that what we could see is this market moving back down. In other words, we are still in a defined sell-off in which we have a series of lower lows, lower highs, lower lows, lower highs, equal low, and now a lower high again if the market comes back down. So it would fit right within that. We really have to, on a technical basis, move above 24 before we can get bullish now on this market, because we've seen it fail within this particular area. So as I said, I want to let the dust settle. I want to go back to my charts over the next couple of days, do some studying and some technical analysis as to where we think this market may head. But as I said, on a cursory look, the fact that we were unable to take out this area could be construed as absolutely a bearish sentiment or a bearish move in the market. Now, there's going to be all kinds of talk that comes in as to whether or not they're going to raise rates sooner or later. And the fact of the matter is, at some point, they will raise rates, and they will raise them, I believe, rather slowly, a quarter point at a time. They're not going to literally change the outlook. They're not going to rock the boat, so to speak. And the key is right now that a lot of the data that's coming in about the economy shows the economy slowing, in which their really hands would be tied from doing that. But nonetheless, we have the markets under pressure right now, closer to 1200 than 1221, and we are flat in gold and silver, awaiting our next signal. So traders, what about silver? We are obviously flat in silver, and there's a couple of areas, some key areas that we wanted to look at to see if the market could hold. We obviously fell into resistance right in this area. I'm kind of matching it up to this top right in here. The other thing that we'll look at in terms of the market itself is this bottom here. In other words, market comes down, finds a little bit of support, clips up, and then moves down. So I think that this is an area that could provide some support if we can continue to see the market lower. We want to see how it reacts at about 16 and then 1550. Those are the areas of support that we would look at. Resistance is still sitting at around 1750 in terms of the upside, and 17. This has been Gary Wagner, wishing you as always good trading. I apologize, we certainly didn't get that today, but we will talk to you tomorrow for another daily update and review, and get back on the saddle and continue to have profitable trades this year. We are still in profits overall on the year, and very much in profits over the last 5 years. Have a great day. Talk to you tomorrow. Bye-bye.